Welcome to the Daily Update. This is Being Prepared Thursday, April 7th, where we'll look at the action in the market today and then see how things look for Friday, April 8th. And we had an up day, but it wasn't a real convincing day, at least according to our daily charts. We're still seeing a lot of weakness coming through the market. We're seeing a real breakdown with a lot of our indicators, but there's something that happened that was positive on Thursday. We started off by really just racing down. It looked like the beginning of Thursday was a continuation of Tuesday and Wednesday, with interest rates really going up, stock prices going down. Well, we hit some support. And that was the scenario that I brought out in yesterday's video. Can we find support somewhere? Well, in the S&P, we did. And that ended up being at S1. And then we bounced up off of that. Now, the question is, can that continue? And I'll show you some charts and go through those things. So on a daily basis, yeah, we're still looking pretty weak, but we might have seen some internal action that could be somewhat positive. So what happened? We gapped lower at the open. We saw selling all the way down to S1, and then midday sometime during the day, we found support. And I'm sorry, this was at S2, not at S1. We saw a rebound and prices were able to go above the unchanged level. That's usually a resistance level on a down day. We bounced right around that level for a while, and then we're able to break above that. And then prices went to above R1, and that's pretty positive. Now, we saw some selling coming into the close, and that wore off some of the advances that we saw, but we ended up being up 0.43%. That in and of itself is not a real big deal, but the rebound could be a big deal. That's why even if you trade on a daily basis or a weekly basis, it's still really good to watch the intraday action, even if you're not a day trader, just to get a feel for what's happening. And that's why I watch things really closely. And that's why I bring up a chart in each one of the videos to show you how things reacted. Volume was average, which for right now is pretty good compared to what it's been. The technicals still look pretty negative on a weekly basis and are weakening. And as we've been dealing with, and we'll probably deal with for the, well, not even foreseeable future, just for a long time now, we are in an inflationary environment where interest rates are going up. There's all the geopolitical concerns that we've been dealing with. We are still seeing inverted yield curves. The one that people really watch, the 2 to 10, that actually switched back and is no longer inverted. That could, in the short term, be positive for stocks. Now we'll see. Can some of the other yield curves end up going back into positive territory? And then the oil supply issues that are affecting us not only on an economic level, but personally, every time you go to fill your car up or attempt to heat your house. So what are some comments that we can make? The technicals are still weakening and a lot of them have turned negative. So the bounce that we saw on a closing basis didn't do a lot to improve the technical picture. At the beginning of the day, rising interest rates have a real impact on stocks. So we want to keep an eye on that. Look at it in the overnight session. Look at it when the market opens and see what are interest rates doing. I'm following interest rates about as close right now as I do the S&P 500. So we want to really keep an eye on those things. Another positive thing that happened was the S&P got back above its 200-day simple moving average. We went above it and below it. Now we're back above it. So we're kind of bouncing around. And as I keep saying, that's a real line in the sand determining, are we in a bull market or are we in a bear market? Yeah, we need to move far away from that in one way or the other. But the fact that we're dancing around that moving average, and it's a very critical moving average, just shows how indecisive things are right now. A little bit above, a little bit below. The midday rebound was positive, but can it continue? If it can follow through into Friday's session, and then we see some broad-based strength, that could help turn things more positive. But right now, it really didn't do all that much. The economic report, consumer credit coming out, and it's probably not really hard to figure this out. it's growing. People are getting more and more into debt with the economic situation really deteriorating. People are having to borrow and they're having to live off credit cards and they're having to use lines of credit, equity in their houses just to try to make ends meet. And we're seeing a lot of people that they're not getting the increase in pay at their job, but they're having to pay the increases when they buy things. And that's really hurting people a lot. The current market valuation is still fairly valued. Our trend, this is another thing that changed. The ADX did drop below 20 and is still declining. So we are now in a trendless environment. How long are we going to stay there? We don't know. But for right now, we are in a sideways, choppy type environment. So those of you that implement a lot of different strategies, this is when you might want to at least consider some more market neutral things. Maybe some covered call writing if you don't want to get rid of your stock, to have it called away from you. Doing some credit spreads, maybe some debit spreads that are more tightly focused. Those types of things that benefit from the market going sideways. Iron condors, things like that. The bias, I've switched now back to mixed. Even though we had an up day, it was really a tale of 2 days. The morning was really negative, and then we hit that support and bounced and it turned positive. So because we saw that bounce, yeah, we could say that's positive, but we still have this other backdrop behind us with interest rates. And then of course, anything else can fly into the picture. Geopolitically or something economically could happen. And that could switch things back more negative if the market chooses to look at it as bad news. And then I'm still saying that the momentum is negative, even with the update. Monday was an update, Thursday was an update, but overall, we're still in a pretty negative environment overall as far as momentum. So let's go through and look at the day's session. First, it's sentiment. This is, I don't know how to take this. We're having up days and down days, and sentiment is really not changing all that much. We're pretty much in neutral territory right now, and that just shows more of the uncertainty that people are saying. If they're really bullish on things, we would see this index go up. If they were really negative on things, we would see this index go down. So as we dance around the 200-day moving average on the S&P, we're seeing sentiment kind of hover right around the middle as well. The VIX did decline a little bit with the up close that we saw, both on a closing basis, and it had been going quite a bit higher as the day started, but then started to drop after we saw that rebound. The VIX of the VIX also declined with the bar chart and showed a bit of a decline on the line chart. The Ulcer Index, and I'm really trying to call that by its right name instead of UA, it's UI. It's still showing a bit of an increase in fear, but we're still below the moving average. We start to pay attention to this when it goes above the moving average and is clearly going higher. That just shows more fears entering the market. When we get back up to the moving average, that's kind of neutral, which is what we're seeing in some of our other indicators. We did have the American Association of Individual Investors. They came out with their weekly sentiment, and they're more positive now. They actually have climbed up and are more neutral themselves. They're not overly optimistic or pessimistic right now. And then we also saw the RIDEX bear bull ratio. It advanced a little bit, but it's not really giving any kind of an extreme sentimental reading right now. What we look for are these real spikes. Well, we did spike when we hit that low not too long ago, but we've really dropped off since then. And then we also have the weekly survey for the active money managers, whether they manage a mutual fund or a hedge fund or some kind of a portfolio. They also are still seeing a bit of an increase when it comes to getting into riskier investments, which means stocks. Usually as this line is going up, that means the market's going up. As this line's going down, that means the market's going down. And we're not necessarily really extreme right now. They're more 80 seems to be about the neutral area, and we're right around 80 right now. So that kind of coincides with the other sentiment figures that we're seeing. As far as our sectors, the healthcare was up pretty good. Energy was up. Staples were up. These are value plays here. Materials were up a little bit. We did have a few sectors that were down. Tech was pretty much flat. Financial sector, utilities, which had been doing well, real estate, more of a value play, and communication did have a bit of a down day. So it was not a broad-based advance, at least when we started to rebound. It was just in certain areas. And then here's our sectors, with energy still way in the lead, utilities coming in second. With, you look at this 31.99 here and you go, wow, oh man, that's amazing. Well, utilities, that's also very impressive, up 9.29% since the all-time high. That's a really good return. And then we go down and look at the last part here. Discretionary still in last place, consumers, and then tech. I'm sorry, communications, and then tech. They're the ones that are really having the trouble overall. Then looking at just the tech sector chart, we advanced a little bit, up 0.16%, but we're still below the moving average. So that's more negative right now. As far as inflation, the CRB was up about 0.5% and still in an overall uptrend. Here's when we compare the CRB commodities or inflationary type things to the S&P itself. It was up slightly and has really been breaking out, which should not be a surprise. And then here's the mirror image. It just shows that the S&P has been underperforming commodities. As far as our technical alerts, we had a lot of the negative ones were generated early. Tech had a bearish MACD crossover. The S&P had a bearish MACD crossover, and I'll show you the chart of that. The NASDAQ had a bearish MACD crossover, and then some of the other sector, the Dow, the materials, and then the Dow had a bearish MACD crossover. To see a lot of these happening at the same time is kind of negative. But that was earlier in the day. It's before we really saw the rebound. Then when we did pick up and go, the NASDAQ was able to get back above 13.9. And then the energy sector, which had crossed above 80, now has gone back below 80. So that's an official overbought signal. And then the NASDAQ just danced all around. We had the S&P 500 get just barely, we closed just barely above 4,500 on Thursday. And then the dollar still is doing well. It set another 52-week high on Thursday. So let's look at the chart. We kind of bounced around. It was really more of a negative open, just blah, 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 blah. And then we just went down negative and then went all the way down to S1 down here. And this is where we found some support. If we had broken through that, things looked like they were really going to get pretty ugly. Well, some buying came in and we're able to push prices back up. We danced along the unchanged level, which was acting as resistance. And then we finally broke through that level, got above some other support with this line that you see here. We got all the way up to R1, and then we're actually able to get above R1, but then we saw some selling coming into the close, and we're at 4,500.21. So we're just right at that level now. Then looking at the bar chart, it's not necessarily all that positive. If you see, we went to the upper area of this resistance, and that's as high as we went before we fell back from that level. We dropped below this resistance level, but we never got to the pivot. So that if you just look at the daily chart, it's like, well, okay, we filled the gap that we saw between Tuesday and Wednesday. So that's interesting that happened, but not a lot was really decided. And then if you look at the bottom, the average and the daily volume are just about at the same level. We're down 6.18% currently from the all-time high. And then growth saw a little bit of an uptick, value, little bit of a downtick. And then here's the growth value ratio, which saw a little bit of an advance, but we're still below the moving average. Here's just the inverse of that. Value is lately been outperforming growth, but we saw a little bit of a decline on Thursday. The NASDAQ 100 continues to underperform the S&P 500. And then here's our peer value. It was up 0.10%. And it's interesting how it came right down to this 50-period moving average and then was able to bounce up off of that. Here's the peer growth ETF or index, I'm sorry. We were able to get back above the 50-period moving average, but we're still in an overall downtrend. Then to compare the growth ETF with the value ETF, just shows that growth, it was only up 0.08%, but still, it did slightly outperform value on Thursday. As far as our trend, this is what I'm talking about with the ADX. We have now dropped below 20. We're at 1908 with that and still declining. The two lines are just kind of jumbled together right now. So we can't really tell, is that positive or negative at the current time? So this would suggest a sideways choppy environment. Now we could quickly come out of that if we see some kind of a move, but we can be in these situations for lengthy periods of time. And if you ever invested back in 2014, 2015, even into a bit of 2016, we spent a lot of time below 20. And that's when the idea of iron condors became very popular. And they're getting all these emails and all these get rich quick seminars and people coming out saying you can generate income and that was okay. The only problem is they came late to that party. That's usually what happens. They start to promote things just about when they're finished. People get sucked into this and then they start doing these strategies and they're getting their strike prices wiped out because we've switched back into a trending environment. And iron condors are great and credit spreads are great. And I do them all the time. But if you lose, because they quite often have a very disadvantageous risk reward ratio. You might get $100 if you're right, and that's great, but you might lose $3,900 if you're wrong. And so, but people don't always focus on that, the risk reward ratio type of thing. So be careful of that. If we go sideways for quite a while, and we might do that because the market has been so indecisive for a while, pretty much the whole year, where there's no real conviction. We sprint up or we shoot down and then we kind of bounce and go the other direction. And so those types of strategies might come into vogue again. But be aware of that. That's why the ADX to me is so important. When we're trending, I don't do the types of strategies where one side can get wiped out. If we're in an uptrend, then I'm looking at bearish credit spreads. If we're in a downtrend, then I'm looking at bullish credit spreads. When we're in a sideways trend, then we can do a bullish and a bearish credit spread at the same time. So those are the strategies that I teach in my courses, and that's the approach that I take with a lot of these different strategies. Now, if you didn't understand what I just said, cool, that's fine. Maybe you have different strategies that you implement. So kind of disregard what I said, but still, even on a trending basis, if we're in a low trending environment, do you really want to start adding to your mutual fund or to your ETF? Yeah, just something to think about. Okay, then our Arun really hasn't changed. It's been flatlining. We're still seeing a decrease in buying power and also a corresponding decrease in selling pressure. So overall, with our oscillator, we're positive, but we're going sideways and pretty much have been all week. No change with the decision point scorecard here. As far as breadth, this is a little more positive because we saw a bit of an upturn based on price. We're still negative based on volume, but it went a little bit flat on Thursday, and I have to cough. Sorry about that. Then our AD ratio, it's still above 0, so that's positive, but has been declining, but we saw a little bit of an upturn on Thursday. This is a little more negative to me. The new highs, new lows, that's a big deal, and that really shows internal strength or weakness. We are still trending down. Even though we saw some new highs generated on Thursday, The overall trend is turning down on this top moving average, and on our 10-day, we're flat to slightly declining. The accumulation distribution, we're still positive there. We're above the moving average, and it went up slightly on Thursday. Short term, we're dancing down around the 20-period moving average, where we were able to get back above and close above each of those moving averages on Thursday. Then our study shows a little bit of an upturn in the 20, a little bit flat to a little bit higher in the 50, and pretty much flat in the 200. Then our moving average spaghetti tree just shows that we were able to get back above the 200-day simple moving average and above the 20 moving average. But now we still have, what is this purple one? We still have the 100-day simple. That's kind of the one that we were talking about a few days ago. We still have that above where we're at right now, which a lot of times is not important. But when we get in these range type environments, that's when the 100 becomes a little more popular and a little more useful to use. The MACD, this is what they're talking about. We've now had a crossover negative with the MACD on the S&P 500. Then the short-term oscillator, a little bit of an uptick based on price and volume, but still below zero with both. McClellan oscillator just inched ever so slightly negative on Wednesday. Well, now it's inched back ever so slightly positive on Thursday. Then the Stoke RSI is in extreme negative territory, but trying to bounce a little bit. Where our Williams percent are, it's continuing to decline and is below 50. So that's more negative right there. The force index has switched over to negative now. That's negative. Intermediate term, we're kind of dancing around a little bit with the 50-period moving average, especially the simple, but we're still well above that. Right now, we were dancing around with the exponential moving average, but we're still above each of those. Then here's the 100-day. We're still able to get above the exponential 100-period moving average, but we're still below the simple, the simple 100-period moving average. Our PMO, still positive, but rolling over based on price and looking a little more like this could cross based on volume. Then our PMO study, a little bit of an uptick with those that are rising, the PMOs inside the S&P. The buy signals, after hitting that extreme positive reading, has just been declining ever since, and we're flat to down with those PMOs that are above zero. BPI, you can barely see it. Didn't really register too much on Thursday, but declined slightly. And here's just, you can't even see it on this chart here. Our rainbow, we're still kind of down inside the rainbow, trying to decide, do we want to go up or do we want to go down from here? The stochastics still looking more negative, even though they were a bit sideways with the short term, still declining intermediate, still declining with the full stochastics. Then the rate of change going back 10 days, I just showed this because we hit that extreme positive late in March. Well, now we've actually dropped below this dashed line, which is zero. So that's more negative overall. The summation index still is continuing to advance based on price, but look at what volume is doing. And sometimes volume can lead the way. Some of our oscillators are turning negative, slope, the MACD. Some of these are still holding up, with a few of them beginning to roll over now. So we're kind of seeing a mixed picture there. The vortex, seeing a decline based on buying and an advance based on selling, but they have not crossed, at least yet. The RSI, because this was calculated on the closing value, so it went up slightly and is still above 50. So that's a little bit more positive. And then this is one that I usually only show. This is the Pring bottom fisher, and sometimes it gives signals. What we notice is this is an indicator designed to show us bottoms. And some of these signals are very valuable. Some of them give us a false signal. or it doesn't lead to much of an advance. This gave us a signal right before we hit the bottom, before we saw the big run up back in March. The reason I bring this up is we have now crossed negative with this. That's not necessarily anything in and of itself, because you can see that's happened before. Sometimes price continues to go higher, sometimes price continues to go lower. But that just means that this signal from the run up is now complete. And that's why I've taken off my scenarios where have we formed a base and are going higher. I've pretty much taken that away now. Enough time has passed. The indicators have changed enough right now. So we're not really living off of this bounce. If anything, if we do bounce and go higher from here, it'll probably be the intraday reversal that we saw on Thursday that could potentially form some kind of a base to go higher from here. But still, we're looking pretty negative on our daily charts. As far as our trading systems, we are negative with the Elder Impulse. We're negative with the SPY. The SAR still has another dot above, so that's negative. Our different charts, Heiken Ashi is still looking negative overall, even though this is a more healthy looking candle that we see currently. The Kegi is negative. It's turned red. Renko now has a red box here. That's also negative. Three-line break also showing a solid bar, which is more negative. Equi-volume, this also shows us where we went in and filled that gap from Tuesday to Wednesday. No change on the point and figure chart. So we haven't seen enough price movement to really generate anything new. The last signal that was generated was a double top reversal, which is positive with all these X's. Well, we need to get back. We need to climb another 600 points in the S&P 500 just for any new X's to even be drawn for that signal. But it's still in play until price dictates otherwise, because this is not based on time. This is just based on price movement. Long term, we are back above the 200-day moving average. On Thursday, the moving average here was at 44.91 and we closed at 4,500. So we're 9 points above the moving average right now. And the same thing with our logarithmic scale chart. The big mega stocks, they were up 1/3% after coming up and hitting resistance, falling back down. They bounced ever so slightly on Thursday. So not a lot of real strength there. The special K continues to be positive for right now. I'm sorry, continues to be negative, but is advancing. It won't be positive until we cross above the moving average. Then our longer term moving average study, a little bit of a bounce up with the 50, kind of a bounce up and right around the 0 line with the 150 and pretty much flat with the 200 period moving average. Broad market, okay, here's the S&P. We filled that gap, saw a bit more of a decline and then a rebound with the mid caps, and kind of the same thing with the small caps. Here's our Dow Jones Composite, right at the moving average. We're seeing a real convergence with the 3 right now. And then here's the FANG stocks. They bounced up. Actually, I'm sorry, they actually declined 0.75%. I was looking at the bar first. So even with the intraday bounce that we saw, the FANG stocks really did not participate in that, nor did ARK. It was down 1.17%. The Dow still is below the 200-day moving average, but above the 50-period moving average and above the pivot. So it's hanging in there, but it was only up 1/4% on Thursday. Then our diamonds, looking at the Elder Impulse, still is negative, even though we've come back above this 65-period moving average. And then down here, the MACD has just crossed back slightly positive right now. Small caps, they were actually down a little bit, and they did fall through S1, but were able to get back above that. But they still closed down on the day, and we're still below both moving averages on this chart. Mid caps, also, we're down about 1/4%. And so again, we're not seeing any kind of strength from the other indexes right now. NASDAQ, it was almost unchanged, but it did recuperate some of the losses and was able to close back above the pivot and back above the 50-period moving average. The NASDAQ 100, same thing, still above the moving average, still above the pivot. Here's the Vixen. It had been really shooting up, but then really started to trail off as we started to see that rebound during the day. Here's the Qs. They're still below the 65-period moving average, and we're still below zero with the 65-period MACD here. And this is nothing, this is just a trading system that I have here. I use this out of the box, and Alexander Elder is the one that developed this, and I just use the same settings that he recommends in his book. Then the NYSE, we're still above the pivot. Okay, that's positive, but we're below the 200-day moving average. Kind of in no man's land right now. The S&P 100 also underperformed the rest of the S&P 500. Wilshire, above the 50, below the 200, but still above the pivot. Then we're still seeing the KST generating more positive signals right now. Our all stocks blipped up just a little bit on Thursday. They're still above the 50-period moving average. And we had a recent death cross over here. And then our non-US stocks, they declined 1.5%. So they're seeing a lot more weakness right now. Broad market, the dollar just been doing crazy up. Euro's been going down, the dollar's been going up. If they get about to even, you know, and if you can do it, and if they haven't locked everything down, might be a good time to go to Europe. I have to confess, I haven't really kept as close of an eye on the British pound, so I don't know how the exchange rate is there, but it's looking better if you want to go travel through the EU these days. And then here's the weekly chart, which will finish drawing on Friday, but is still in a pretty solid uptrend. Oil is down below 100, closed at 96. Gold was up 0.75%, but is still just kind of chopping around here. And then here's the ETF. It was up a little over 1/3%. And I'm not a pattern person, but you can see where we're kind of starting to design some kind of a wedge type thing here, or a pennant or something like that. I don't buy into that. Now, some of you are going to greatly disagree with that, but that I get more insight by just watching things all the time, where I don't need to go in and try to interpret all of this price movement. I'm just watching it, so then I get my feel that way. But if you trade a lot of individual stocks, if you're going through doing all of your scans and you come up with a stock that you don't know much about and all you have to look at is a chart, then I can see where you might want to try to find some patterns to work from. I solve that by just looking at these things all the time. And then here's the longer term ETF for the gold. And silver was up a little over 0.5%, is back above the 50-period moving average. And here's the longer term view right now. Bitcoin getting down into the mid 40s more, down into the 44s, 43s. So it's really been chopping sideways quite a bit. And then here's the 2 to 10. This is probably the most prevalent yield curve that people watch. We actually went back up. So this is no longer inverted. Could that be a positive sign for the short-term run up in stocks? That's a question that really is hard to answer right now, but that has happened in the past. Look at other times we went inverted, and then if you stop this and really look up to what happened after we crossed back, usually right here, we see a pretty good run up. Doesn't last forever, but it could be a real significant move that some of you might want to take advantage of. We're still inverted with and these numbers are so small, with the 10 to 5 yield. And we're still negative with the 30 to 5 yield. And then here's the one that currentmarketvaluation.com uses, and a lot of people use. This is the 10 to the 3 month. This one is still shooting higher and never did go inverted. And then this is the one that Edward Yardeni really recommends. We don't get a lot of changes in this because the Fed funds rate just stays the same until their next meeting, or until on an emergency basis they raise or lower interest rates. But this continues to be positive overall. And then here's just a chart of all of them together compared to the S&P. Again, some of you might want to stop and look at this. If you want this chart, just send me an email. I can send you a graphic of this chart as well. If you belong to my program, I upload every chart that I look at, even if I don't talk about it. I upload those to the website that I use, and so you can always go in and look there if you are a member. But I don't have memberships going right now. I'm waiting until things calm down where I'm living to try to get that thing going. But if you want me to just ever send you this chart or any chart, send me an email, and that's the best way to contact me. I have the comments locked down pretty heavily because there's so many crazies on the internet. I pretty much ignore the comments that people put on there. So if you really want to have a serious discussion or have a question, please send me an email. That's the better way to do it. That's why I include it every day at the end of each video. And then yields, just kind of just bouncing all around here. It's going all over the place, looking like a wild frat party. And then here, just shows how internationally, how yields have really been climbing. And then on a price basis, we still continue to drop lower on bonds, and we're breaking through what had been previous support. And then the corporate bonds are also showing some more weakness, with the current yield at 3.51%. Junk bonds, they, even with the bit of a rebound that we saw, they still declined about 0.25% on Thursday. Our relative studies just still showing that breakdown of the gold. It looked like gold was really breaking out. Well, now it's kind of falling back. And then here's energy, which continues to break out against the S&P. Here's the growth against bonds. It was up 1.13% in the ratio because bonds went down and growth stocks went up a little bit. So that helped that improve. And then here's tech against the SPY, which has really been underperforming. Then here's tech against the 10-year yield, which just, again, just as interest rates go up, tech stocks tend to do worse because they have to borrow so much money to fund all their innovative products. And then here's the 10-year against tech, just showing how interest rates have really broken higher. And then here's the discretionary against the staples, which discretionary has really been breaking down lately. And then here's the S&P against interest rates. Also, interest rates have been rising more than the S&P has. And then here's the low volatility stocks. They were up 1/3% on the day. And then here's the ratio between the two, where it actually declined a little bit, but is still seeing a golden cross recently and has been trying to show what could be a breakout. So what's our outlook for Friday? As far as the technicals, some of them are negative, as I showed you, with others weakening. Some of our oscillators could be rolling over unless we see some real strong positive price action. We're still in that intermediate term range. We're not in that short term range now because we're able to fill that gap. We're still battling between growth and value. We still are talking about yield curve concerns, oil, and then the different supply chain issues. China's still in their lockdowns, and that could feed over into the supply chain. On Friday, we have wholesale inventories, not a real big market mover, but still something to pay attention to. Russia, Ukraine, news is coming out of there all the time, but is it going to impact the stock market unless something kind of big happens. It really hasn't been that influential, but that could change at any time. And then, of course, our yield curve concerns, and then the different issues with oil and releasing some of the reserves and very high prices that people are having to pay. So what are our scenarios? I reworked these a little bit. I'm still kind of going with the main. Well, really, you could put both of these together, A and B. Rising interest rates. As interest rates shoot up, that now has been taking stocks lower, as well as some of the yield curve concerns, which that looks out into the future, saying, okay, anywhere from 6 months to 18 months to 2 years from now, we might have a recession. And then our internals and broader markets, they are weakening, as well as inside the S&P itself. So we're seeing a real technical breakdown, which could still suggest that we might go lower from here. Okay, what are some things that could suggest we go higher from here? Well, that short-term intraday support that we hit at about 44.50, that if we see follow through, that's what it's all going to depend on. And not necessarily at the open on Friday. Just when we get closer to the close on Friday, are we seeing follow through to the upside from that bounce on Thursday? That's how things started back in March, was we hit a low and then just started shooting higher. Could that happen again? Of course it could. Now we just have to see, is that what will happen? As far as our oscillators, some are still positive, but they're either negative or weakening or close to being negative. The moving averages are providing support as well as resistance at some point. And then the fast drop off that we saw produces a bounce. We saw that midday bounce, but can it continue? Now, the other scenario, which a week ago I was saying isn't going to happen. Well, now we're there. Now, what's scenario number 3 is that the ADX is now below 20 and continues to decline. So price movement will typically slow down in this kind of an environment and be very choppy. Now, if we break out of that, that probably means the ADX is going to turn and go back above 20. But we don't know that's going to happen for right now. This back and forth above and below the 200-day moving average just shows how indecisive things are. And on a sentiment level, we're just a little bit negative, little bit positive, little bit negative, little bit positive. So people don't really have a big conviction right now about things. So what's our conclusion? The SPX is weakening and turning negative. We got to go with that for right now. But there's some bright spots. At least in the short term, it's more mixed, but it is showing weakness. Intermediate term, it's still kind of positive, but we have another day of these oscillators rolling over. That's going to have to switch more over to negative. And then long term, we're positive because we're above the 200-day simple moving average. But we have more than a point decline in the S&P on Friday, and we're back below it. So anyway, so here's the different videos that I make available. This weekend, it looks like I'll do the daily video for Monday's session and then the snapshot video. I'll do the weekly video. I doubt I'm going to be able to work on any more of the monthly videos. I just have too many things going this weekend. So thank you. Have a wonderful Friday. Enjoy the opening of baseball season again. If your team didn't play, mine didn't. The game was postponed, and I will prepare the next daily video after Friday's session.